ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and we have today two distinguished guests. We'll start with Dr. Milan Somberg. Welcome to the show.
Thank you for inviting me. Delighted to be here.
It's great to have you as always. And Jim Eat from Eat Foundation. Welcome to the show, Jim.
Thank you, Sasha. Great to be here.
Great to have you. And of course, first of all, congratulations to you, Jim, with this recently finished the ladies seniors US championship. And of course, my regards to Angelina Belakovskaya, whom I know for many, many years, and who's from the same hometown of Odessa, Ukraine.
Oh, I didn't know. I did
Well,
not
she
know.
is, yeah. And I'm so glad that she became a champion. She deserves it. And she
Yeah.
was actually a couple of times, I think, U.S. women's champion.
Yes, she's a women's grandmaster, very strong player. And Sasha, I invited her on this show, and she said you had already asked her.
Yeah, yes. I did about probably 2-3 years ago, quite
Yeah.
a long time, yeah.
Yeah,
Yeah.
she's just very busy now with other activities.
Absolutely.
Yeah.
Yeah. Okay. And so with investing, what we have happening is the market goes up and up, higher and higher. Today, I think it's somewhat consolidation. I don't think that the upward movement is over, and Wednesday is not over yet. We'll see how finished today. It started somewhat higher. Now it's a little bit lower. So that's non-conclusive event. Milan, how you doing these days in the market? I know
Well, what did you
you're
say?
a market timer. So
You're optimistic about the market, Sasha?
overall, yes, there is no reason why not to.
No, the Saudi Arabians hosted recently, a few weeks ago, what has been called Davos in the desert, where they invite outstanding economists to attend. They have close to 800 billion in a sovereign wealth fund, and they want to wean themselves off oil. So they're talking to economists about how they can do that. And so they're inviting anybody who is anybody in the world of economics attended that meeting. And in order to have a market, you have to have disagreement. Somebody wants to sell and somebody wants to buy. And unless you have disagreement, you haven't got a market. Well, what happened here, Davos in the desert, all the major financial people in the world universally agree that we are headed for trouble. And so the best place to be if the market is going to decline is to be in cash. And I am solidly in cash now and have been for a while. And so let's see, if I take a look at the market, it's down today, but it's up for the year. It's up for the year about 14% year to date, about 3.5% this week, about 1.5% for the month. But long term, the put call ratio is negative for the week, for the month, for 6 months from now, for a year from now. I don't know how reliable the put call ratio is as an indicator. When you take a look at market indicator, there are hundreds. And which ones are you going to pay attention to? Certainly, the put call ratio bang on states how investors feel about it. Now, there are 4 ways to beat the market. There's one way to equal the market, which is something that we can teach people in a matter of seconds. Here it is. Buy an exchange traded fund which tracks the S&P 500. And SPY is the best because it has the narrowest bid-ask spread, and it's the oldest and the most heavily traded, SPY. So buy the American market as a whole, not individual stocks. So 6 points that matter. One is save. If you don't save, the other 5 don't matter. The second one is do it yourself. I had a friend over the other day, and he is a retired civil servant, and he's got a nice pension, as does his wife. They went over to the bank, Toronto Dominion Bank, and they found out that their fees that they're paying for the bank to look after their portfolios comes to about $20,000 to $30,000 annually, every year. And so whether
They must have $100 million portfolio.
I don't think you need that large a portfolio to rack up that kind of money. But they have a large portfolio, but certainly the expenses. Say, when you take a look at the cost of managing a portfolio, so they quote about 1%, 1.5%, seems reasonable. But when you put that over a lifetime of investing, it comes to an annual income, a total annual income, which investors could keep themselves. So, Sasha, the people who follow this show are the kind of people who are investing themselves. But those who get others to invest for them pay through the nose an annual income easily. So the put-call ratio, I'm not sure how reliably bang on shows how investors feel. And the put-call ratio is negative for the week, for the month, for 6 months, and for a year from now. And it entirely is in agreement with what these financial experts talk about, and that is that the economy will decline in the next year or so.
No, very quick, according to what you just said, when you said that their annual expense for management fee is about $20,000 to $30,000 annual, right?
Right,
So if that's 1%, is what you indicated, so their portfolio should be in the vicinity of about $200 to $300 million. That's
No. I'm sure that I'm misquoting something here, Sasha. They are paying $20,000 to $30,000 annually. Their portfolio isn't anywhere near that large. When you take a look at hidden costs, you don't have hidden costs because you are managing your portfolio yourself, as are most of the people who are watching this program. But if you take a look at mutual funds and take a look at the hidden costs, there's a very long list of hidden costs, which they have to disclose, but they do it in small print. The small print taketh away, the large print giveth. And so that's where you are. So the hidden costs are real, and they do add up to a year's income. This portfolio that has to be hundreds of millions, I'm making a mistake somewhere there for sure. But certainly that $20,000 to $30,000 annually is not a mistake. And so they were aghast when they saw what that was, because the TD Bank, like all banks, used to kind of bury those fees. They have to disclose them. It's a legal requirement, but they don't have to disclose them openly. So they do it in small print. And so certainly investing yourself, first of all, is easy to do. And secondly, it's very worthwhile because it easily adds up to a year's income that investors can keep themselves rather than give it to somebody else who cannot match the market over a long term. You know that you, Sasha, are an investment genius, and you're doing better than the market is, but most people are not investment geniuses. So what happens is let's look at it this way. Suppose we got a room of 150 people, and we ask them, put your hand up if you think that you're a below average driver. How many hands will go up? 0 hands will go up. Suppose there's 1,000 people in the room. How many think you're a below average driver? No hands will go up. But the fact is, there's a very small number of people who are average, and the rest are either above or below average. Yet nobody realizes that. Nobody will admit to being a below average driver. When it comes to investing, most investors are below average. And the reason they're below average is because Wall Street keeps so much that it is insane. 40, 50 years ago, professional people at the top of their profession had incomes that were similar to top bankers. Today, a top banker earns in a day what a guy like me would earn in 3 years, 2 years. What's happened? And will that change? No, it will not change, because people who control the money also control the political process. So we have to live with that. So yeah, I'm entirely in cash, and that's in line.
Milan, since when are you entirely in cash?
I would say about 4 or 5 weeks, maybe 6 weeks.
Yeah. Because the last program you mentioned that you are invested in S&P 500, and you're not selling the covered calls, but you are fully invested in S&P 500. So therefore, I was trying to figure out when was the moment when from fully invested and not selling even covered calls, and I asked you if you became a market timer. and you said, well, possibly.
Well, yeah.
You're saying that you're fully in cash. So when that transformation,
Yeah, it sure looks like market timing, which we advise against, of course. But a while ago, maybe 4, 5, 6 weeks ago, I was entirely in cash,
so how come you
entirely in the market, entirely in the
so
market.
last week you said completely different things.
So
Maybe
what happens, in a rising market, you're better off holding a security, which should be the American market as a whole. You're better off holding it than writing covered calls on it.
Exactly, and that's what you said, that you
Yeah,
hold
exactly. Yeah.
it,
Well, then,
and you're not selling covered calls.
not
Right.
selling covered calls.
But
That's
today you said that for last 4 or 5 weeks you're in cash only.
yeah,
How
that's
is
right.
that
So
normal
you
place?
know, I may not have the dates exactly right, but recently I was entirely in SPY and hoping that it would go up based on the put call ratio. And holding a security is better than writing covered calls on it in a rising market. So I expected the market to rise based on a put call ratio. And then recently, I would say just a few weeks ago, I went entirely into cash because, in line with what the experts are talking about at Davos in the Desert Conference, which took place a few weeks ago, they expect the economy to work globally to decline. There's no disagreement there. So being in cash has been okay for the last day or two. And being in cash is a safe place to be in a declining market. So, you can write cash secure puts if you like in a declining market, but that's where I am, totally in cash. And my wife agrees with that. And so I am unlikely to be telling you anything different a week from now.
Let's leave it at that. I'm still puzzled at what to make out of your story. But however, Jim, how you're doing in the market? What's new?
Well, Sasha, the people in the Desert Davos, what they say, and they're convinced about it, they were also convinced and telling us for 3 years that we were heading for a recession. So, I take all of that stuff with a grain of salt or maybe a grain of sand. And I think that, the American economy has been doing very well, even though these people have been telling us we're bound to get a recession. It's bound to turn downwards. There's no question in their minds for 3 solid years. And now it seems like the average American investor might be agreeing with them, according to Milan. But I don't see the justification for it. I go back, and I've told you this before. The pandemic happened in 2020, a global pandemic. It broke the global distribution system. That means goods did not get to the places where people wanted to pay for them. And when they trickled in, you were able to charge much higher prices. This led to inflation, global inflation, not just in the American economy. But the Fed decided that the traditional way of fighting inflation was to raise interest rates. So even though this inflationary spiral had nothing to do with the traditional reasons for inflation, they applied the traditional remedy. This made no sense to me at the time. It's made no sense to me now. And it's only lately that they've decided, hey, maybe we've done enough, even though their actions had no effect on the economy other than to make it harder to borrow money to start a business. What has happened is the global distribution system has been repaired. We're now able to get goods to the consumers at a normal rate, so people can get them. Now, some companies have found that they got away with charging higher prices. So we're still inflationary in a little bit, but this is just because companies, aren't going to charge less if they can get away for charging more. And customers learned, customers taught the companies that they were willing to pay a little bit more for their goods and services.
If you don't charge what the market will bear, you shouldn't be in business.
Yeah, so they found out that they could charge higher rates, so they do. This makes perfect sense to me, but it's not long-term inflationary, and so the employment rate is at historic lows. Wages have gone up, jobs have been growing. The economy is doing very well. Until I see some rational sense that the economy is going to do poorly next year, I'm still, I'm not going to say I'm bullish, but I'm still not bearish, and I'm still not all in cash. But I would say this to Milan. What Milan was saying, which I agree with, totally, is that if you're not going to do it yourself, and sometimes you don't want to spend time in the market, so you give your money to somebody else to invest for you. Milan's giving you an alternative to that, which I recommend highly. But if you give your money, I'm going to double down on what he was telling you, to someone else to manage it for you, they're going to probably put your money in their products. So not only are they going to charge you a fee to do that, but it's going to be in their products, whether it goes up or down, it doesn't matter. They're getting rewarded internally in their company for buying more products. And the next product that the company comes up with, that's where your money's going to go. So beware.
James, none of these financial experts are in your league when it comes to chess. But when it comes to money management, they're the top of the top on the planet. Why do they universally agree that we're about to see a major decline in the economics globally? Why do they agree universally?
I'd like to offer a challenge to anybody who thinks how great money manager he is and how brilliant he is.
Yeah.
I recommend he'll put $100,000 on the line, and I will match with my $100,000 on the line, and you'll take it anytime, 6 months, 12 months period, and we'll see at the end of that period what's happened with his $100,000 and my $100,000. Would you like to find somebody who will accept my terms? Go to Saudi Arabia, go to these financial wizards, offer them, here is a chance. I'm willing to take that. And a winner will get extra, say, $10,000.
Sasha's got more guts than I do. I wouldn't put up the money, but I will tell you this, Milan. When I have talked to these people were, in my life substantially a couple decades ago, and I got to think how they thought, and a lot of it is peer pressure. The guy next to you says one thing, and the guy next to you says one thing, and then all of a sudden everybody's saying the same thing.
Yeah.
So this kind of unanimous thinking, that has its basis in somebody that you admire said something, so you repeated it, and it gets repeated around the financial market.
Yeah, that's true.
It's not based in reality. It's based in opinion and people following someone else's opinion. So if everybody's saying this in the Desert Davos, nobody's going to stand up and disagree. It's just
Speaking of people following opinions and everything, I had a quick question for y'all based on something that I had heard recently and all along those lines. And I wish that Nick was here because he would probably have a better answer than maybe even y'all have. But I had heard somebody say that maybe one of the greatest investments that we could do and that we don't do enough of is this notion of cash value life insurance and everything along those lines. So I just wondering y'all's thoughts around that, because I heard somebody that recently said that was going to be one of the best investments that you could ever make was cash value.
One of the biggest frauds is cash life insurance. This is for suckers, really. However, there are suckers born every minute, so I have no problems with that. I would never touch this product.
Would you say, Sasha, that people our age, people who are either retired or close to retirement, shouldn't need life insurance?
We don't need life insurance.
Yeah, if you've done things right, you don't need life insurance. That's right. Yeah.
My
Because
daughter.
the argument that they were making was that apparently you can draw the money out, and it is becoming money that you can put in and draw out. And they were thinking that there was in a room made up of many people in the minority community, and they were trying to pump the idea of cash value life insurance. And like I said, I did not quite buy the argument, but I didn't know if you or Jim, it seems like y'all are thinking that is a fraud. Maybe it is another fraud, but your thoughts?
That's just trying to exploit people that don't know better, in my opinion.
Yeah.
And, they should be ashamed of themselves for pushing that. But that's my opinion.
That's why I asked. That's why knew I had some experts in finances who would have the opinion for those that might have heard something similar. Because, like I said, it was out there
Mark, on the
circulating
one
on
thing
social
we can
media.
agree. We can agree is that there is a sucker born every minute, and there will be enough suckers to buy enough life cash insurance. And all
It's a
this.
reason we have snake oil salesmen. People are buying snake oil.
A French philosopher whose name escapes me for the moment, probably come to me later, it's not important, said that behind most great wealth is a great crime. Now, if you take a look at what's happening in Israel right now, the Hamas leaders are billionaires. 4, 5, 6 of them are billionaires, and they're nowhere near Israel. They're living a couple of hundred miles away from Israel, and billionaires. So where did they get that money from?
By the way, they make Arafat just a joke because when he passed away, he had only $2 billion to his name. No, these
This
people,
silly guy.
they live in Qatar or so. They're worth $4-5 billion each. So Arafat is a joke, really, compared to.
Yeah.
I thought, I thought that Arafat is by far the greatest freedom fighter of all time when he amassed $2 billion, because I thought, who could do better than Arafat? He's a joke. These people are doing so much better than Arafat, and they have enough idiots who are going on campuses.
Put their lives on the line for them. Yes.
Say Palestine is great from
Did Arafat win a Nobel Prize for Peace?
I believe he did at one point or another. That was after the Camp David Accord.
Exactly.
Now, you do know that, and I know that many of you are of the Jewish faith. And like I said, I have friends that are Jewish faith. And matter of fact, Dad's girlfriend is a Jewish and everything. But I have heard some people that have actually brought a kind of a counter argument, which is the fact that if you look at the newspapers and at the media and even the billionaires in the United States, the population of billionaires that are Jewish is disproportionately larger than the population that actually exists of the people in the United States.
What about Nobel Prize winners? Do you know that 27% of all Nobel Prize winners are Jews?
And in the chess world, a lot of them.
Like I said, I'm just saying, but even in the media, because one of the things they said was that even the New York Times, I believe, which sometimes people think is very liberal, the person that runs that is of the Jewish population. So some people that will say that a lot of the media outlets, and there are some that would argue that that is the reason that there is a pro-Israel bent to some of the media. And I'm not saying that is correct or not.
What you said, Sasha, to put it in perspective, I think a better perspective is this: 20% of the world's population is Muslim. 20% of the world's population is Muslim. They have fewer than 10 Nobel Prize winners. 0.2% of the world population is Jewish. That's less than 1/5 of 1%.
I think it's
They have over 100.
0.02%.
I don't want to get too much into this type of discussion, but I will say this, Mark, in the kind of the idea that has been used against Jews, part of the basis of anti-Semitism, was that the Roman Catholic Church declared money lending to be a sin, calling it usury. And so the only people that were able to lend money for profit were Jewish people, because they were going to hell anyways, according to the church. And so Jews tended to start to make money, and then people would become jealous and then take the money from the Jews by force. And then the Jews would start to make money again. And so the jealousy and hatred started to develop because Jews always seemed to have more money than the rest of them. And it was basically a fundamental principle of the Roman Catholic Church that money lending was a sin. This is where this all Jews seem to be rich started, and it's all, and as soon as they built wealth, people came and took it from them. So this is a long,
it's a long history and everything. And on the flip side of that, there is a group of Catholic universities, including some Franciscan ones in, I believe, New York and Ohio and some other places, including some that are, ironically, some HBCUs that have put together a coalition that are actually welcoming Jewish students because of that anti-Semitism into their university. So there's actually a coalition that has been put together that includes some Franciscans, includes some, I believe, Jesuits, which is what Marquette is, the way university I went to, and definitely several HBCUs.
That's where I went.
Yeah. Anti-Semitism is a badly used word. It's a poorly used word because
I agree.
They're also Semitic people.
Exactly. Very good, Milan. Thank you for saying that.
Agree.
No, definitely.
Now, also, the Catholics, the prelates, the top of the Catholic Church, take a life of poverty. They don't own anything. But the cardinals in the Vatican drive around in Rolls Royces.
Speak it. The truth to power. Good for you, Milan.
Well, I mean, there is some interesting costs that go on between the elite and the non-elite, whether you're in one part of society or another. I had joked with y'all earlier, and I was going to get back to something off of the political front and everything, but it does come to something that people may be wanting to invest in. We saw them invested in it before I have a friend that drives a motor scooter, and I think that I told y'all earlier that I was watching a social media site, and the young gentleman was literally running around and had his cat have a helmet as well. And there were some people that were giving on his case about that because they were like, if there was an accident, the cat is probably a goner. But I was just wondering y'all's thoughts around helmets for safety and whether that's a good investment and everything, because definitely I know you just had a accident, and I don't know if you have a pet, Milan, but would you be putting a helmet on your pet if you were riding with said pet? Because this gentleman literally had the cat ride with him, and the cat had a little helmet.
It depends, actually, where you are. In the countries where bicycling is part of the background, say the Holland and Denmark and Finland and so on, they don't wear helmets. And the reason they don't wear helmets is because you don't wear a helmet walking on the sidewalk because it's so safe. So they set aside paths for bicycles that are so safe that there's no need to wear a helmet. So don't invest in helmets. But what we need to do is, one of the great ways that we could improve the community that I live in, and probably most of North American communities, would be to have more bike paths that are safe.
I mean, that's what I was going to say. Maybe we'll invest in bike paths. I know there are some great bike paths here in North Carolina. We've got the one on Falls of the Noose, Tobacco Road, and a number of others, and they're always building new bike paths. And I know they've got a lot of them in California.
Automobiles contribute a great deal to environmental changes. For instance, the free market economy, Adam Smith type of free market capitalism, has lifted more people out of poverty than any other system, and it works really well. But it does have its dark side. So, for example, Detroit was able to remove the streetcar tracks from every community in North America except Toronto and San Francisco. And a streetcar can take 60 to 80 cars off the road. So Detroit would rather have the 60 cars on the road than have a streetcar. They were able to.
A lot of people took the wrong lesson from what Adam Smith wrote, and they think that pursuing their selfish, rational interest is the right thing to do, when really it's their enlightened self-interest that they should be pursuing.
That's Ayn Rand talking. Ayn Rand talked about enlightened selfishness.
Speaking of enlightened selfishness, and I know that Sasha's probably going to wind down and everything, but what is y'all's thoughts, speaking of investment, about the notion of the hospitality workers? And I know a lot of you do travel, getting ready to go on strike, because I think that's going to take place on Friday, and I think some of them are concerned about their economy and all along those lines. So I know it's an investment show. Maybe people are going to invest less than some of these fancy hotels in Las Vegas, because apparently they are getting ready to go on strike in Friday is when they're saying that they might go on strike, and there's a major event getting ready to go on there, including one of the big automobile races that's getting ready to take place there. They were scheduled to take place, but we'll see if that actually is as successful as they are hoping, with all these workers about to go on strike in the hospitality industry.
All major changes hurt somebody. All major changes, somebody gets hurt, even though collectively we should be doing better. So When they introduced machines that replaced people when it came to sewing cloth, making cloth, there were a lot of people objecting to that because they were going to lose their jobs. Artificial intelligence can replace writers. It can replace composers. And that's part of the reason why you have a strike among the movie people today. I have a daughter and a son-in-law, both of whom are in film, and they're concerned about being replaced by artificial intelligence, which is possible. James, you were going to say something.
Oh, no, I was just pointing to the book that I wrote. I don't think I'm going to be replaced.
You're not going to be replaced? But, I mean, is your maid going to be replaced the next time you go to a hotel? You attend a hotel doing this tournament and everything, so is your maid going to be replaced?
I agree with what Milan was saying, that change does cause displacement. And there's no doubt about that, and we have to adapt to change, because one thing that's constant is change. So there's no stopping it. So we have to adapt to it. And those who adapt better, they'll be happier. But there is a place for collective bargaining, because the owners of great wealth that tend to exploit people without wealth since the dawn of time. So collective bargaining evens up the playing field a little bit. So I wish the strikers well. I hope they come to an agreement soon, so everybody can get back to work. And it's hard to watch when this happens, but my sympathies are usually with the people who are giving up the rent money or giving up dinners. The cutting back on your weekly food budget. It's tough.
On medication, cutting back on medication.
My heart goes out to them a lot more than to the casino owners.
I'll tell you that I have my reservations about investing in hotels or casino hotels or something like this, because if you remember, even such a great businessman as Donald Trump had 6, not 1, not 2, but 6 casinos, hotels going bust, bankrupt, period. So if he could fail in this business, then any business
can. He had that many businesses fail. Not all of them were casinos. So he failed in just about everything he touched.
Yeah, Trump University, for example.
Yeah, Trump University, famously, Trump Vodka, Trump Steaks, everything he touched.
Yeah, I don't know how much failure you can do in a business that is very much controlled, my understanding, from the mafia and all in that kind of space, because definitely that's actually how that kind of came about in Vegas, is my understanding. Correct me if I'm wrong, because you're in the West Coast and everything, so correct me if I'm wrong. There's some people that are heavily invested in that might be part of our underworld and all in that space. So I don't think Harrah's is going under, and I don't think that some of these other major ones are going under in the way that Donald Trump did, who had some very bad investments. But hey, I could be wrong. And if there's nobody to serve you or to do the gambling and be the ones that are handling the roulette wheels, then yeah, they might go under if that's the case. With
bankruptcy has a useful role. We've forgotten, for example, that Henry Ford went bankrupt 5 times. Mark Twain went bankrupt, but he did repay all his creditors, even though he didn't need to. Legally, he didn't need to, but he repaid them. And
Walt Disney 7 times.
Mm-hmm. Yeah, but bankruptcy allows people to make mistakes. In Switzerland, if you go bankrupt, you go to jail, and you go to jail in direct proportion to the size of your bankruptcy. So who in Switzerland is going to take any chances the way that Henry Ford did, let's say, and everybody who amounted to anything?
Oscar Wilde went to jail too. These are types of things that that was the common way of dealing with bankruptcy, was to put them in jail.
Yeah,
so we've made some progress here in this country.
Sasha, do you know what one of the greatest business schools is along those lines and everything? And it's actually a business school, and I'll tell you the story about it. It involves one of our historical places here in Durham, which is called the Black Wall Street and everything. But I have found that there are quite a few, and yes, folks can tell that I probably am due for an appointment with one very shortly on this coming Friday and everything. But actually, the barbershop is one of the great business schools, because a lot of business deals, just like they're done on golf courses, are done at barbershops and at beauty salons. So a lot of business deals are done there as well. So maybe that's something that people should invest in, because literally the guy that founded Black Wall Street here in Durham was cutting the hair of Mr. Duke, the founder of Duke University, which is where he learned the strategy that he then brought to creating what some people call the Black Wall Street, or one of the Black Wall Streets in North America and everything. But he literally learned from seeing Mr. Duke do business deals with Vanderbilt and a number of the other robber barons of the time. So he literally learned while he was cutting his hair.
Well, Mark, I have to mention this. I know we have to wrap up, but there was an article in the New York Times today about a woman who's 109 years old who survived the Tulsa
massacre,
Black Wall Street, the massacre that occurred there. And they're talking about the litigation. It's going to the Oklahoma, I think, Supreme Court.
Yes.
That's going to decide whether or not they're going to hear it, even to see if there's some way of making some sort of amends for what happened there. There was an HBO special about that I watched. It was really a horrible thing to contemplate.
Oh, it's so shameful. It's so shameful, and nobody got punished for it. The massacre started as a result of some black boy who is said to have whistled at a white woman or something. He
Certainly
was
made up.
Moderated. He was okay, but they destroyed the black prosper part of Black Tulsa. They had their own part of the community which was very well to do, and they destroyed it. And nobody ever got punished for it. Nobody went to jail. They haven't even admitted the fact that it was a crime.
Exactly.
Yeah. Well, history is written by the winners. And,
exactly, Alon. Exactly right.
And I keep saying that most history is revisionist. Most history is revisionist history because it's written by the winners. You know that every American president would have been found guilty at Nuremberg as a war criminal. Every one of them. And yet Henry Kissinger won the Nobel Peace Prize. The man's a war criminal. Yeah,
I'm liking you today, Milan.
Milan's on fire
What
today.
company? Henry Kissinger and Yasser Arafat. What a company.
Robert McNamara lived to regret it. He published his tale of woe. But they were lying to the U.S. The citizens the whole time. They knew better.
Yeah. Oh, sure. Yeah.
Yeah, because who was the one that got the Nobel Peace Prize? That was also the creator of the atom bomb, and I think he regretted it later as well. Wasn't that
Oppenheimer?
yeah, Oppenheimer.
Oppenheimer. Yeah.
I think somebody could be given a peace prize is definitely Joseph Stalin, but he passed away too early. But I think Putin still has a chance to become
Oh my God!
Nobel Prize winner, according to Jim, our friend Adam Lamparella. He adores Putin and he believes that
Yes,
America has to become friend.
Moscow's the Eden.
What's his name? Putin and so on. Well, we live in very, very, very interesting times.
The Chinese curse.
You're obviously right that the history is written by the winners. Okay?
You have to do your work to find out the facts.
Absolutely. So the winners, that's who write the history. Okay, we'll finish today's program on this note. So let's be winners. Let's have green on our screen when you're doing investing.
Green on the screen.
Love it. Green on the screen.
Yeah, green, you're okay. And what helps me is to be market neutral. I understand there are many reasons for market to going up, same reasons as for market to going down. And you mentioned, of course, Milan, all those experts whom I will never listen even for 5 seconds or even 4. So you can only discard all that into your mailbox or garbage can. It depends. And I think the most important thing is to always be in charge of your personal portfolio. What is there? Is there still a reason why you hold that security? There could have been a reason. There must be a reason, I would say, when you bought it, for example, right? Now, you bought it, say, a month ago. Okay, today, do you still have a reason to hold it? It doesn't matter whether it went higher or lower. Is it still reasons that you hold it? If it went lower than 7%, you have to sell it. It doesn't matter.
Sasha, owning an individual security is a mistake half the time. If you buy something, you could be buying it from a market maker, but never mind. You could buying something, you're buying it for somebody who's selling it, it is possible for both of you to be right, but most of the time it isn't. Either the buyer is right if the market goes up, or the seller is right if the market goes down. Both of you cannot be right most of the time.
Well, my parting word is to check your asset allocation. If it has gotten out of
Yeah,
whack,
absolutely. Yeah.
if you're all of a sudden 75% in security, maybe you get back into cash a little bit. So this is an important thing to check.
In my specific way of dealing with the stock market is when I'm selling cash covered put.
Mm-hmm.
Okay, does it eat into my cash allocation or not?
That's a great question. You're better set up to answer it than I am.
Let's see. I have $200,000 in my fund portfolio, and I sold, say, 3-4 puts on, say, Amazon. It doesn't matter even now, which is very expensive stock, but I'm willing to try this. Or doesn't matter what. Okay,
right.
So I sold that put, and I got infusion of even more cash. Now I have cash access, not 200,000, but say 285,000, and I still have no shares.
Right.
I have exposure, mind you. I do have exposure, but I don't have any shares. So therefore, the beauty of this system is that I still have my cash available. I still have, you know what? Just I think yesterday I was really surprised. Palo Alto Network. Okay, they have reports next week. Okay, so I decided, I'm not going to buy stock because maybe they can have lousy report. Maybe they will go actually down. But what I can do, I can sell cash covered puts. So, and let's see, Palo Alto Network, say around $240 some. Okay, so if I will sell 220 put, or even 210, doesn't matter, with expiration, let's see, 17th of November, which is just a week and 2 days from now. What is my exposure? So they will have such a lousy report that will go down to 210, and I will acquire plus premiums that I'm getting. So my cost of the stock will be, say, $206 a share, which is trading today at 240. How bad it could be? It's not that.
What happens if your security is Enron or Nortel? What happens?
Oh, you're busted. Okay, you're busted. You're gonna drive Uber. Okay, you know how to drive? You go to Uber, uber.com, and apply for position.
Get your resume updated.
Get your resume, apply, and you're in business. How about that?
Well, as always, you guys disagree, and I agree with both of you.
So I have solution even for that horrible scenario. But since you drive, most people believe that they are good drivers, according to Emilian, right? So you know the city, a decent car. I have Mercedes, and I can use it for Uber driving. Why not? People will give me good tips, possibly. So the life is beautiful, and maybe I will even enjoy it. We'll see. But however, this is there is no the end of the world. There is in each situation there is a way out. So if you buy, if you could buy today Palo Alto Network at $210 a share, which is trading at 240, how bad it could be?
How bad?
I don't think that it's that bad. I don't think that you will be so lucky as to actually get Palo Alto Network at 210.
You're a market wizard, Sasha, and I am not. You're a market wizard, and most people are not. I can pick out Palo Alto Network only with hindsight.
Well, it's part of S&P 500, so you indirectly.
Well,
you're in cash now. Okay, sorry. You're in cash. But when you will make your decision to invest in the S&P 500, as most of
you have Palo Alto Network.
You will have Palo Alto Network, and my congratulations to you. Okay, with that, I would like to finish today's program. Thank you so much for participation.
Thank you for inviting me.
See you same place, same time next week.
Same back channel.
Bye-bye.
Bye-bye.